In today's video, I'm going to break down everything you need to know about credit cards and tell you exactly how to use them in the same way as the top wealthiest people in the world. By the end of this video, you will know how you can make credit cards work for you rather than you working for your credit card. If you still have not done this already, please head down to the red button and subscribe to the channel now. Also, while you're at it, why not smash the like button so that YouTube knows to recommend this video to lots more people. So let's take this back to the basics. What is a credit card? End of the day, it's this plastic thing that we carry around with us in order to make purchases. But we use either the banks, the building societies or other types of credit lenders' money rather than our own money that we have saved up. The credit lender will usually set a credit limit and you can use as much of it as you like before having to pay it all back by the end of the month. But if you can't pay it by the end of the month, you start to pay it off in installments where you end up paying interest on the balance, basically making it like a loan. There are lots of different types of credit cards in the market, so how do you know which ones to get? There are 6 main types of credit cards in UK. A balance transfer card, which lets you move existing debt over to a new credit card, usually with lower interest rates, making it easier to pay off debts incurred from other credit cards. Then we have credit building cards. This helps you to build your credit rating if you have poor or limited borrowing history. However, they usually have a high interest rate, but if used correctly, you can use a card to help you out in the future. Then we have reward cards. These cards give you the chance to get benefits and incentives, such as points at a shop, air miles, or even cashback on any purchase every time that you use the card. But once again, they usually have high interest rates as well. And then you can get overseas cards. Now these cards let you use them overseas when you are shopping in another country, where you also don't have to pay a fee for each transaction, which most of the other cards would charge for. Therefore making this card great for when you go traveling. And then we have purchase cards. Now these are cards that are used mainly for shopping within the country that you got it from and could offer a low or maybe even a 0% interest rate, so pretty much letting you borrow money for free. But it's all good knowing what types of cards are available. But if you don't know how to use them correctly, where you make them work for you, you could end up in the trap where you end up working in order to continually pay off your credit card bills forever. So right now, you should be asking yourself, how should I use my credit card in the right way? So here are some quick tips to help you use your credit card in the best possible way. Number 1, credit utilization. And what does this mean? Well, let's say you have a credit limit of £1,000 and you've spent £500. This then would mean that your credit utilization is 50%. But here is the secret. Most lenders prefer that you keep your credit utilization to under 30%. And the main reason for this is because if you use more of your credit limit, the lenders start to think that you are financially stretched and therefore making you a higher risk in the eyes of the lender. Number 2, repayments. As we saw earlier, most credit cards charge interest if you do not pay your balance off in full each month. And if you miss any payments, it could also mean that you can lose any benefits or incentives attached to your card, such as low or 0% interest periods, or any cashback incentives. Now each month, you have a choice to pay a minimum amount towards the amount that you have borrowed, or pay off the credit card in full, or set a specific value yourself that you can afford. But obviously, the less you pay, the more interest that you will end up paying. And any 0% interest cards will only keep the 0% for the time period of that offer. And so any debt that you accumulate will start to be charged interest after that 0% period. This is why the best way to use your credit card is to always make sure you can pay the amount you used in full. Number 3, set up a direct debit. This really helps with the previous tip because let's say for instance you are having a really busy month. All of a sudden you forgot to pay the balance. This can cause really big problems to your credit score. So again, the best practice is to set up a direct debit which will pay the full amount due each month. Number 4, don't withdraw cash or use it abroad unless stated otherwise. So another way to incur really high charges from a credit card is to use it abroad. or to take out cash. That is, of course, unless you have a specific credit card that states that you can use it abroad or take cash out without incurring additional charges. Otherwise, you should always avoid doing this. Number 5, take advantage of rewards. At the end of the day, you are getting certain rewards. Make sure that you make the most of them. Maybe it's cashback on purchases or air miles each time you spend, but always weigh out the cost of the card compared to the value of the benefit that you can actually get based on the amount that you would usually spend during a 12-month period. Now, before applying for a credit card, you should think about these few things. Analyze your existing debt. If you owe money to existing lenders, it might be best to pay off those balances before applying because, as I mentioned before, the lenders do not like it if you look as though you can't handle your own financial situation. The other thing to think about is to check your open accounts, because if you've got any unused credit accounts, it may be a good idea to close those accounts first. Because again, lenders will see this and think that you are having financial problems, which could be the reason as to why you need multiple accounts. Another thing to look out for is to be really careful when putting in your details for your application for a credit card. Because when applying, it is important to make sure that the details are correctly filled out, because a small mistake can lead to your application being refused. And when you are declined a credit card, this will show up on your credit report, and then the lenders will check this credit report before provisioning you with any additional credit cards. And if they see that you've already been declined a credit card, this won't work out too well for you. And this brings me on to the fact that you should always check your credit history. Now, your credit history is the most important factor that lenders consider, as this is what gives lenders a full idea on how trustworthy you are and how likely you are to make your payments on time and whether you can pay it off in full. It is important to understand what a credit score actually is. And quite frankly, this should be one of those things that are taught at school at a very early age. So a credit score is essentially a number that is assigned to you by your lender when you apply to take out a credit or a loan. Now, the lender will calculate your credit score looking at your credit history and report. They will typically do this by using one of these 3 companies. Experian, who gives a credit score between 0 and 999. Equifax, who gives a score between 0 and 700. And TransUnion, who gives a score between 0 and 710. Now, it goes without saying that obviously if you've got the higher score, you're going to have a better credit rating, and therefore being able to get better interest rates and also being able to have the ability to take out more in credit or in loans. Now, another thing to note is that when you use your credit card, you're also protected to a certain level. So when making any purchases with a credit card, between the prices of £100 and £30,000, you're protected by the Consumer Credit Agreement, which states that the credit card provider is equally liable if anything goes wrong with the purchase, such as the company that you bought from goes bust, or the items that you bought are not delivered. Which is why sometimes it's better to put your purchases on a credit card than, let's say, your debit card. The reason why credit cards are so important is because they have a big impact on your credit score. So it's important to know how to use them properly. Therefore, the take-homes today, I would say, is to make sure that you understand what is on your credit report. I use a website called Credit Karma, where you can go to check your credit report for free, and they use TransUnion. But ideally, you would want to check your credit report on all 3 major credit report companies and make sure that everything that's on the reports are completely correct. And then just use your credit cards to help you out financially and not to use them for financial help. So as long as you keep your utilization under 30% and pay it off in full every month, you will be able to build and maintain a great credit score. I'd love to know in the comments anything that you've learned new today, and if you knew everything, congrats, and you must have a great credit score, as long as you haven't been silly with debt in the past. But that's it for me today, and if you haven't subscribed to my channel yet, please head down to the red subscribe button and make sure you click on the bell as well so you get notified when my next video comes out. And as always, make sure you like the video, comment down below and share with your friends and family. Peace and love to all of you. See you on the next video. Bye.